All right, good evening, guys. Count It Tortoise Capital. This is the nightly strategy podcast for November 19th, 2020. So I'm working with Dr. David Boji and the True Storytelling International team, and we're putting together an alumni roundabout that's going to help people with their true storytelling, both for individual and organizational change. And it is already going so well that I sent out an invite to some folks this week for us to do this Saturday morning. And this is the model that we're going to use. A safe place in which we can trust each other to work on the truth in order to get after some opportunities. There will be a place where we just enter a sacred space to exchange and listen to stories with no comment, no judgment, no processing, no advice, just being present for each other to listen and receive deeply these stories from the heart. And then when we come out of that sacred space, we may do some work on restorying and repurposing. But the first one we're going to do on Saturday is just going to be a story exchange. The topic is going to be on a story from the heart about when you discovered who you are and what your purpose in life was in 3 to 5 minutes. And we're just going to listen to each other's stories. We're not going to talk about trading or anything. We're just going to talk about that topic. And we're not even really going to talk about it. We're going to listen to each other's stories and then just receive that gift. And then when that's over, we'll go to the hybrid trading workshop. So I'm going to post this this invitation in Patreon too. It went out to a select group of folks already, but we're going to do it by Zoom at 10 o'clock Central. And I think that's going to be a recurring weekly event. And we're just going to see where it goes. We've done a couple of sessions using these rules already with some global folks, and it is life-altering. I can say that. So more to follow. Be on the lookout for it. Came across this self-care wheel as part of the positive psychology workshop I'm putting together. This looks like a nice way to work on balance in life. I have the copyright permission to share this around, so I'm going to share this one around too. But it seems to resonate with some folks, and it looks pretty good. More to follow on that one. Meanwhile, back at work. So today is the third day of a downward grind. It opened slightly below the close, sold off, just peeked out of the lower skin of the dragon, and then recovered in the afternoon to close at the top of the dragon. So we are right in the middle of this critical state, supported by the extension of the RL30 and the PSAR, which has been steadily marching up the cliff here, up the side of the mountain. Tomorrow that PSAR stop's going to be at 348. The 10-day low today was at 347.5. Tomorrow it'll go up to about 350 and be there for a couple of days. The 10-day high tomorrow is still going to be up here at 365, but it's going to drop down to 362. So you can see there is a range compression happening in here, and today's little afternoon recovery and holding into the night suggest the possibility of a support here and drive it on to test tomorrow's 10-day high and then the 30-day high. So we'll see how that goes. To the downside, support is the 1-day low, the 10-day low, the Bollinger Band main, the PSAR, Z1, fair value, belly of the dragon, belly of the RL10. This is a 10% sell-off here, and price is just at about a 2% from the all-time high. So within striking distance here, one ATR away is all it would take. In the sectors, we have the S&P here at plus 0.42. Treasuries at 0.51. The Russell at 0.77 with a stronger finish. And the Dow was the laggard today at 0.2. Better than the S&P today was consumer discretionary at 0.5. Japan at 0.67. Tech at 0.81. Energy in Brazil at about 1.65. Bitcoin 2.34. Oil exploration also at 2.4. The triple Qs and the triple tech at basically 2.5. Clean energy 3.65 continues to just rock. Simon Property Group 5.25. We alerted on that one this morning when there was a, they just released another secondary public offering to raise $1.5 billion to start buying some more properties at fire sale prices. Today was a day for the electric vehicles. We had NEO at 7.5, Virgin Galactic 6.5, Devon Energy was a nice trade at 6.25. Nikola and Tesla both around 2.6 and 3.2. So we had Devon and Alcoa from the materials were strong. There's Win and Walmart 2%, U.S. Steel 1.5%. So some good choices around. The sectors that underperformed today. Included materials were slightly down at 0.42. The FANGs and finance and oil at 0.35. Emerging markets 0.16. The Ackman hedge fund was flat. Healthcare minus 0.07. Mexico gave back at minus 0.3. Silver and VIX and wheat and precious metals all down large today. Silver down 0.5, VIX down 1%, and wheaten down 2 2/3, all the way down to 40. It used to be up around 55. It's just been crushed. But it's starting to come into an interesting support area when we look at the long term on that one. Just want to take a quick look at wheaten. Yeah. So wheaten has come all the way back to what was a nice support level in here. It's entering into that support zone, and the last time it was there, it made this nice move up. So we'll see what happens now that it's in this support level. And when Wheaton finds support and that whole precious metals finds support in these areas, it's not unusual to see these nice big gains. So we'll be on the lookout for that. But it's got to find support first. But it looks to me 40 is the next place that it would logically come to. And then the move from 40 to 56 is $16, which is a 40% move. That's a pretty good swing. This was also a 40% move. And after these periodic collapses, there's a nice, that's a 10% move. So this would correspond to this and this extension down here by the Z3s, after which there has been at least moves back to the Bollinger Band mean each time. So this would be a move from 40 to 46, which is about 15%. So that's worth watching on the 65-minute. So let's be mindful of that one. All right. Let's see. What's this one? All right, here's a Devon Energy trade. This is, the super pinch, because you have the Z3 lines have pinched together, less than a frog mark. And now you have the inside here, you have the RL270, the RL90, the RL30, and the RL10. So everything is tightly clustered inside this little gizmo right there. And the breakout is going to be nice. And even if we're just using the previous swing low of the RL10, and I waited till it crossed the VWAP to be sure, but you could be playing this at the Z3 pinch break here, and that's about a 20-cent risk. This is about a 30-cent risk, and that's 13.05 to 13.25. So that's a couple execution R and then a couple scratches. This was so tight that I didn't want to let it come all the way back here, but it was bottom tick pretty much in both, and I was out of emotional energy here, and it was getting late. But still, that's a couple R in the usual way. I was playing the energy stocks and the electric vehicles, so I missed this opportunity in here. When I say energy, I mean the electric car stocks, and Tesla, NIO, Nikola, and didn't get this one until it alerted as a super pinch, which is a special form of that Z3 pinch. Super pinch is like the acorn, and it can really grow. And if I'd have been better, I could have gotten maybe more of this, but I was pretty tight on the trigger, and it just was not in my rule set to get those pieces. Again, I was more concerned about the return back to the VWAP, given previous weakness in energy. What's interesting to note is that how much the VWAP moves here on this buying. So going into the close, this was, as you can see, very heavy volume, and so that looks to me like accumulation. And tomorrow, I'm expecting some more follow through on Devon. So DVN should be on our short list for tomorrow. All right, here's one on, this is just a standard play on PBW. This is a turbo continuation of the long-term swing trade that we have. And this one had a gap up. You can see it closed here and then gapped up. Now notice that at yesterday's close, the VWAP was here, but the price had drifted down. And so where it gapped up to the open was really just into the vicinity of yesterday's VWAP, so that's not really surprising. But when it moved out to a peak, a sell-off and then a peak, and then took out the previous hump of the RL10. That felt like a caught a 2 entry, and so with the stop at the PSAR and below the RL270, so that's about a 40-cent risk. So that's long at 81.25. There's a COTA 2. I didn't take it because I was still pretty close here. I took the second COTA 2. In both cases, the retracement the RL10 did not come through the dragon. And so I added the second position here and then cashed everything with the typical manager's exit at 82.75. So that's a move of $1.50 on a 40-cent risk, which is about 4.5 R on the first one, about 2 R on the second one, so probably 6.5 to 7 R all told. I wanted to share some good work from Joe in the chat room. He's been crushing it. And here he's got target. Oh, excuse me. Oh, gracious. Here's a Z3 pinch with a breakout, and so he's buying the breakout here. He's using the just below the RL, the PSAR, excuse me. About a 40-cent risk, which is, if you look at his frog box of $1.40, so 40 cents is about 2/7, which is about 30% of a frog box. So that's a nice and tight MMRB. And when you can play an MMRB that tightly, you can get some nice R multiples in here. So this move in here is about at 0.3 of a frog box, and he gets a couple execution R's on the way up. Got a bad fill on his exit. Then over on HPR, which he has been tracking from. He has other reasons to track it, although this is really reason enough right here, this extreme Z3 pinch. And this is about a 20-cent pinch of the Z3 lines, and the frog box is 62 cents. And the range stat is $1.64. So if you get a breakout from here, and if you're just in the far side of the Z3 as the entry, like he's showing here, you can get almost 8R move out of a range stat move. And so here's 1, 2, 3, 4, 5, 6, 7. There's a 7R to there. It gets an extension. He gets some bad slippage on his exit, but still is able to net 4.3. There may have been a way to get an earlier exit on that, if I can pull this down a little bit. And that is, if you notice, there were actually the 2 minute bars before his exit. Yeah, the 2 minute bars were both high volume, but in the red. So we had, after this peak excursion beyond Z3, now you started getting high selling volume on that solid green candle, and then that second one really takes it out. And that is pretty bad slippage, but there's 4.3 to 1. So he was talking through his decision making on holding, and he's really started to internalize the trade management techniques with the sniper and the manager and the MMRB. So he's doing a really nice job of picking up the trade management skills. And what's nice is that we're able to apply that to a variety of entries, that almost no matter what reason you have to get in, once you're in, you can start managing your risk, your open risk, in a standard way. And what that allows you to do is really concentrate to build proficiency on the thing that feels like it matters the most, which is the management and exit of trades. Remember that every time you manage that trade, you're making a decision about exiting. So the rule sets for managing are the rules for exiting. It's a continuous. And you might make 3, 4, 5, 6, 7, 8 different decisions in a trade. You enter once, but then you might make 5 or 6 management decisions. So if all of your management decisions are part of a single procedure or a single process or a single body of knowledge, then you're going to get a lot more consistency by studying and applying yourself in that area than you do on exploring different entries. The entry, after all, is just one decision. All right, so those are the trades I wanted to look at for today. Joe's doing a great job. We had some bunch of other ones in the chat room that are worth your attention. We're going to shift quickly to the daily report. Had a long day in the classroom today. All right, so we are still in bullish normal conditions. Oversold long term, came back into the yellow on the 2-day cycle. ADX is still below 20, a neutral at 18.9. The risk Z is at 1.69. So again, we're right at the point at which we are either going to get a nice breakout of the all-time high and go beyond Z2, or we're going to get that kind of rollover and grinding move back to the Bollinger Band mean. So we're at a critical state when it comes to swing trades here. And in either case, the least surprising phenomena would be an increase in the size of the daily ranges. So we're going to be prepared for range expansion now intraday. No signals in channeling and overreaction. Same cast of characters here for the min pain and the max pains. Lots of dojis in the Dow today, and 3 different channeling signals. There is a, let's see, there's a Home Depot. There is a Microsoft. Which is also 4.7 to 1. And notice the Home Depot is 4.2 to 1. And a channeling in United Health at 2.8 to 1. So it's not surprising when you have a channeling that you also have a nice an auto framer. And and it should be that way when you understand how that pattern is formed, right? So just a quick divergence, if I may. So when you get a channeling play, that means that there was a bullish move. It's greater than the 200-day moving average, for example. And so you've had this bullish move up, and then over this look back period, if we look back 10 days, we've had this thing get below 20 on the 10-day NDX. So what that means is that we're in an oversold condition, but you combine an oversold condition with a longer-term bullish, and now the trade is this, a return back to fair value. Well, when that's the case, then it wouldn't surprise you that the 10-day high up here, is the area that we're measuring that sell-off from. And so if today was like a doji, and you see a lot of dojis today, then you have a small range compression and a reasonably large retracement move. And that's why you're going to see things like 1 to 3 to 1. And so you have 4 to 1 in Home Depot, and 5 to 1 in Amgen, which is also a 5-day down. So Amgen has had 5 lower closes. And now if you just use the daily range as your risk box, It's 5 of those, 5, back up to the 10-day high. So this is a 5DD pattern, and that tighter ranges of today give you these favorable R multiples on a simple retracement to a non-controversial price level or the 10-day high. That's why we use that one. Okay, so it's not surprising then that we've got some good ones showing up, and you even had McDonald's today at 5.5 and a doji. So that's really all you kind of need, is that it's quite a distance off from its 10-day high. It had a tight little range today, and then there's 5.5 of those just up to the 10-day high. So that's actually a pattern where you're just using trade location to make this a frameable trade. Okay, so there's some goodies on there for tomorrow. All right, next up is the ETF 30. Again, we have a few dojis and 3 channelings, and that's going to be gold at 7-1, and utilities and healthcare. Healthcare looks interesting here. It's a channeling, and it's at 4-1 on the auto framer, and it actually broke down out of its 10-day low today. So that's got some possibilities. And that's what that looks like. So what we've got is it's already put in a little bit of a recovery. It found support just above the Bollinger Band mean and the PSAR flip, and retraced all its losses. And what we're looking for is this return to a 10-day high. That would be our desirable trade. And we would say, it would have to get through the skin of the dragon, the hump of the dragon, the peak RL10, on its way up to a retest of the 10-day high. So each one of those would be a place where we would invoke the 2R battle drill. And I'd be willing to take a profit in any one of those 4 if I saw it getting weak. Now, a way to get started on this would be on the 65-minute charts, especially if it breaks out above today's high. You could auto buy it with a wide, a dollar stop, and then manage the trade on 30-minute or 65-minute charts, if you didn't want to do the 1-minute, 3-minute deal. But that one is poised for success right now, and that is healthcare. All right, the auto framer. Again, not surprising. We're going to see a lot of good symbols that test out better than 2-1 because of the combination of a sell-off in the markets and a relatively tight range today that creates the conditions for really good auto framer trades. And there's a lot of good names in that stack. You got McDonald's and Amgen, Healthcare, Microsoft, Home Depot, just to name a few. Even like seeing Honeywell inside there. On the daily squeezes, again, the doji creates conditions in which we can get a nice one-day pop. And again, you get McDonald's, Disney, discretionary, and Home Depot, and Honeywell once more, and Microsoft. They're trying to tell us something about Microsoft. Excuse me. Yep, I certainly like that. I always see the opportunity as this, from a 10-day high to the breakout. So I see that as the opportunity. And I see this is the risk. And to the downside, I think, yeah, I would be ready to trade that down to here. So let's leave this trade frame on. We'll see what we can see tomorrow. So ready to play that in either direction. That's a form of the visual chart framing from the hybrid workshop right there. All right, so we've got a few more symbols that drifted into the fall today, including tech and healthcare. So that means they've fallen far enough that it could actually be lucrative. So Microsoft, same condition, along with United Health and Apple. I like all three of those for that very reason. Procter's been such a winner, but now that it's in the winter, we probably should start stalking that as a value play. Even though that's winter, that still doesn't look that bad to me. It's still stuck inside this larger fair value zone, but it's getting near the bottom of it, and it's reversed with a higher low each time. So to me, we can actually think about playing that one just like that, and a breakout above the high. And then the idea is it could test 144 with about $1 stop. Yeah, that's a 4-to-1 reward to risk if you just use $1 stop. And all it has to do is get through the dragon, and that would be non-controversial. But then if it did, what you'd see is you would see these higher lows connecting, and then up it would go. You would expect to see that then. So let's come back to that one tomorrow and see how we do. Okay. On the other hand, a breakdown from there. Would I trade that one short? I sure would. It's already broken the PSAR. It's out of the river. And now the breakdown would get it down here to probably to the Z3. And if that cracks, look out below. That's the end of a really long run. And it's had almost 25 days to recover, and it hasn't. So I like that one. Just talking myself into getting short Pfizer. But again, if that fails, it's the end of an era and on to something new. All right. Multi-time frame NDX, this will be the last thing we look at here. The winners today, Walmart and Salesforce. Again, I look for these big changes of pace, whereas most of the rest of everything was weak. Those two, Salesforce and Walmart, were the unusual breakaway plays, along with treasuries. So I wonder what Walmart looks like. Let's go look. Sure enough, that's pretty solid. No fears. Yeah, that's ready to just keep going. Buy it. And then treasuries gave a quiet little bump today above 160. Trying hard to... well, that doesn't look much like the risk-free rate of return, does it? It's all over the map. Boy, that's just hard to call. I can't see that as a swing. But I think you could start it intraday. And it really, as we've said in the past, it has to get above 170 to be decisively good. It has to get above all this crap. So if it can get above 162, then this is some opportunity space. But I see that as strictly tactical and intraday trading. If it gets above 162 and you were doing it intraday and made some money, then I could see keeping a fifth of the position with about a $5 stop as the risk. Okay. Because that would protect you against the bottom of that box. All right, that's everything we got for today. Let's frame our trades, and then let's trade those frames tomorrow. Okay. Let's take good care. I'll get this published and posted in the usual spot. Take good care, guys.